Yeah, like Sriram said, I mean, we brought in these industry leaders to kind of clarify the state of the industry, how we got here, where we're going, and we're really lucky to have them. So I know it's a busy space. Thank you for taking the time out of your day to come talk to these kids and spread education and awareness. Let's get started. First, let's just start out with how you got into blockchain and cryptocurrency and kind of what interested you initially getting into the space and kind of learning about it. And you can feel free to jump in whenever. We don't have to go to a certain structure or anything like that.
You want to get started?
You're going to start with the old guy.
Yeah, you earliest.
All right, I started watching cryptocurrency probably in 2010, 2009 maybe. I have to go look at the articles that I was reading to figure out what, but I wasn't really paying that much attention to it. I do recall pondering how it wouldn't work the way it was described, but that's because I was listening to journalists. By the way, if any of you are confused and think you can learn something by reading journalists, you are confused. It's a really bad way to understand about the world, and it's a really bad way to understand technology. Terrible way to understand technology. But as I watched it, at some point I realized I could use PayPal to fund a Mt. Gox account and buy some Bitcoin. And I bought a bunch of Bitcoin at 75 cents. It's worth a little more now. I think currently the price is somewhere around 6,400 today, something like that. So a little bit of return on that. Unfortunately, I'm here talking to you because I did not buy enough. I then finally got around in 2012 to reading the white paper and realizing, oh wait, this really does work. And oh, by the way, journalists are completely confused as to how this works. And I started really getting into it. In 2013, I started doing meetups and founded the Texas Bitcoin Conference, which the first one was in 2014 in March. And we've been having them more or less once per year since, and we have the next one in this coming weekend. By the way, if you talk to Dr. Sriram,
you got it absolutely right.
Oh wow!
Amazing. Most people don't butcher it the first time.
Totally random, and no, I didn't talk to one of your students for a long time. Anyway, he can get you into the conference for free. Now, if you're in the blockchain group, can you raise your hand? All these people can get you to him to get in for free if you forget. Okay? Everybody hear that? I can repeat it. No. Okay. All right. So, and if you have friends that you think are interested in cryptocurrency and want to learn about what's going on in Austin, because a lot of these companies here will be at the conference, and there are other companies. There's about 120 blockchain startups inside of Austin alone. And it's a great place to meet these people. All right. Then I started Factom. Factom was designed to solve particular problems with data on the blockchain so that you can do actual digital identity. And I've been doing that since 2014. And I'm going to stop here. Thank you.
Let me jump in as well because I'm kind of related to him.
He's my brother.
Yeah, I got into the space, I guess a couple of years later. Then I bought Bitcoin at least 100 times higher than he did, right? Just in 2 years, right? And then I let it sit a little bit, right? And I think after a few months, it jumped out like 10 times. So well, I gotta look into this, right, and spend more time into it, look into the code and research into all kinds of projects. And we have a common friend, David, who was running a fund.
David Johnson.
Yeah, and we trying to get involved in try to do more investment. And one day I wandered into the office and bumped into him. Right, and he asked me to look into some code, and so yeah, I'll do it. Right, I have some more than 20 years of engineering background. I also have economics background at that time. So yeah, let me look into it. And I guess a couple of months later, right? And these guys, David and Paul, came to me and asked me to join his project at that time. At that time, I was researching Ethereum, and one of the friends over there actually got into that. And I was having a big decision to make at that time. So, but I was lucky. I want to make a decision, and so maybe if one of the project will be successful, and I'll benefit from it. So I made the wisest decision ever in my life. I later on put all my Bitcoins into Ethereum, and I spent all my time on Factom project to become one of the co-founders. Luckily, both of these two projects were so successful. Yeah. So. And then I think a couple of years later, in 2016, I started a company called Wanchain and start incubating something new. That's where the Wanchain came out. Yeah, in 2016 and 2017, started Wanchain project. Yeah. Okay, that's my story.
I can go next. What's funny is that my first entry into the crypto space. My friend, who is kind of a local investor, angel investor, said, "Hey, there's a really cool company that you should invest in. They're in blockchain and crypto. You should get involved in their friends and family seed round." And it happened to be Factom. So and that was kind of my first kind of foray into the space, and through my friend Brian Donnelly, and now we co-office with David in the building, basically. Yeah. So. My background was not in technology, it was in energy trading, specifically on Wall Street. I spent a little bit longer than a decade post-Enron kind of identifying complex systems in electricity markets. And I moved to Austin about 4 years ago, and I was working for this private equity group and running kind of this power strategy business there, and kind of transitioned from trading to structured origination and then energy investments and M&A. And about a year and a half ago, the company that we acquired got acquired by a large energy oil company, and they said, "Hey, we're buying them for their technology integration and what they're doing with their reputation technology, with some of the stuff that they were doing with their administrative technology around retail energy customers." And I went to Riverstone, which was the large private equity group, and I said, "Hey, let me go and be your head of innovation." And they're like, "Well, you don't know anything about tech. What are you doing?" So spent about 6 months researching blockchain, researching the opportunities and benefits of being able to incorporate emerging technology into other businesses that we had a lot of domain expertise in. And then basically about a year and a half ago, met up with my co-founder, who is at the City Sciences Lab at MIT, the Media Lab, and we started the Token Commons Foundation, which is focused on building protocols to help manage common pool resources and leveraging the work from Eleanor Ostrom around common and polycentric systems. And our main focus was kind of trying to figure out ways to do incentivization for pro-social behavior, and kind of leading into that, I know that's complicated, but leading into that was how do we identify solutions to incentivize carbon mitigation strategies for renewable energy. And so that is where the foundation is focused, and that's the Swytch project.
Cool.
So I first heard about Bitcoin on NPR, actually back in maybe 2011. It had just crashed from $30 down to $3, and all the guys in Silicon Valley were really excited because they could buy drugs online with it. And I thought that was interesting, magic digital internet money. And I looked into how to get it at the time, and at the time, it was very, very difficult to get. You had to get like a phone card, turn it into an OK Pay card, so that you could go get like a Mt. Gox certificate and like load it on Mt. Gox, and then you'd have some of this magic monies. And after like going through that process, I'm like, there's no hope for this because no one could ever use this because you can't actually convert it between dollars, which was super, super short-sighted. But it got me thinking about it, and it took me about a year, and I finally started to understand it. The reason I was able to understand it wasn't because like the technology was like so opaque. The real reason that I was eventually able to understand it is because I understood money, right? And I think that's probably the biggest hurdle for most people looking at cryptocurrencies and blockchain. It's not that they don't understand blockchain, it's that they don't understand money. But once you understand money as it exists today in our society, you realize blockchain is far more analogous to it than it is different. So I invested in it some 2012 time frame. I was in grad school at the time, kind of thought about just quitting grad school and don't need a PhD, just go into crypto. But if you were around in like 2012, 2015, the ecosystem was a pretty sparse place. So I ended up finishing my degree, got a job at a place called Consensus with one of my friends who I introduced to crypto. Did some consulting there on energy projects, and we ended up, based off those projects that we did with large energy companies, proof of concept projects with Ethereum, came up with an idea for Grid Plus, and we spun that out of Consensus last year, and I've been working on that since. The things that I'm focused on now, besides like Grid Plus, there's really two problems that I see with blockchain that need to happen to kind of win the world over. The first problem is blockchain right now is still an obscure protocol in many ways. And the systems that allow the abstraction of that secure protocol into just rote utility for the average person is not yet there. So at Grid Plus, we're building systems. If you check out our blog or publications, we got some cool YouTube videos. It's still early on, but basically trying to build hardware-software solutions that just look like normal financial systems to people. So you give it to your mom, you're like, here's a debit card, here's a device, you can have monies, right? But having the security pieces baked in such that you don't have to explain any of the security to her, there's just enough layers that she'll, one, get it, and two, won't get her money stolen. The other thing that I'm focused on, we have a project going with Sriram. We haven't really fully announced what that is yet, but it's focused on scalability blockchain, which is, I think, the second most pressing need at the moment. So, but with those two things, I think that blockchain is a little bit like fire, and it's been let out of, Pandora's box, and it's sort of an inevitable economic endpoint for financial systems.
Awesome. Yeah, thank you for your backgrounds. I kind of want to build off what Karl was going for there. What do you guys see as the biggest obstacle for blockchain adoption? Kind of what's hindering it from becoming adopted by the masses?
Pick a victim.
Okay, I can go. I think it's a usability, right? It's just a couple of years ago, my wife and I tried to use this Bitcoin or Ethereum applications. How can anybody use this? Right? We are engineers. It's so hard to figure it out, right? And it is slow, and sometimes you have to wait, right? It's very difficult to understand it for average people, right? For mass adoption, I think in the future, you gotta be very easy for everybody to use, right? And our team has been researching this. Well, what can bring the mass adoption to it, right? And of course, Wanchain is trying to build this, infrastructure for the future finance. So we try to connect with all these different blockchains together, right? So we're thinking that, well, in the end, probably it will be to all these terminals, either cash registers or your mobile phones. For average people, it has to be mobile phone, right? So we're looking at how we can enable everybody use a phone to understand where they are, tied to the identity, and actually use a phone to do your average transaction as well as the digital assets, and also future any assets once they are tokenized. So that's what we are looking at right now.
Yeah, I think from my side of the fence, we talk about money flowing into the ecosystem. We talk about institutionalized parameters around regulation and how do you get real money, real institutional money, not private money or family office money or kind of the fringe part of money back, into this ecosystem, and that's coming. I think there's a lot of grown-up crypto that's happening now that was kind of like, an evolution of young projects and people with very little experience coming up with a really good idea and going out to the market and getting a bunch of money. And then you have people on this panel and people that are doing things in the real world that are bringing it back into kind of a bit of kind of an ideological difference from kind of the Bitcoin maximalists and kind of how it started into kind of this traditional enterprise world. But you need to get kind of institutionalized process. People we speak to are very uncomfortable with basically just assigning, doing partnerships and adopting kind of nascent technology, adopting a currency that they don't know kind of the reputation of the players and who's involved. And I think you're going to need to see that kind of evolve in order for us to get real institutional money in the door, which is going to support additional projects, as well as kind of broad-based enterprise scalability and adoption.
I'll go and then. All right. Yeah. So again, to this idea of usability, it's interesting. So if you think about cryptocurrencies, they're pretty interesting. I had a thought a few months ago, and that I think the only true form of non-force-based human ownership is an unexpressed idea, which is interesting. But unexpressed ideas couldn't be used in the past. An unexpressed idea is a secret. And cryptocurrency is the ability to take a secret that is unexpressed, so it's the only non-force-based form of human ownership, and get utility out of it. So it's the only thing that isn't predicated on me being bigger than you to say that this is mine, which is interesting. I don't think you can make the argument of any other thing in the world except crypto having that property. In terms of, I kind of alluded to this, just giving you my background, it's all about secrets. It's about how do you keep those secrets, but how do you utilize those secrets. So if you look at like Bitcoin early on, there was a lot of focus on how do we make sure we keep our money safe. So people were using like air-gapped computers and paper multi-sig wallets and all these fun things. But if we're to realize the digital sort of internet money and actually the efficiencies that you can gain from not having intermediaries, you have to have the ability to have those secrets exist in a digital environment, not buried in a hole somewhere. And so at Grid Plus, we saw this as the problem that was hindering the business model of being able to make real-time payments, and that was one of the critical pieces of our value proposition as a business. So we built this system that would allow you to have this continuum of security, right? And that's a different idea, and I still don't think that people really understand that there's this continuum of accessibility versus security. But if you think about your bank account, right? You have a credit card. You use it all the time. You expose it to a lot of people. It's very susceptible to fraud. You have a checking account. Your checking account you expose to a far few number of people, but it's still potentially susceptible to fraud. You have a savings account. Your savings account is basically only known by your bank, and you do inter-bank transfers from your savings account to your checking account. So like, no one really knows what that number is. You're not likely to have fraud happen to your savings account, and then you take it one step further, you might have a brokerage account. So even within the context of money, and I didn't even talk about cash, right? But cash is also here. So in cash, I can't back it up, I can't replace it, but we carry it around and we find utility from it, and we just use these things where they need to be used for the purposes that they need to be used. And crypto needs the exact same continuum. I need to be able to have crypto on my phone that I can walk around, and buy a coffee with, but I also need to have crypto that I can bury in a hole somewhere, and I need everything in between. So if we don't have that spectrum, if we don't understand that there needs to be different accounts, different accessibilities, different securities, we can't actually realize the benefits of crypto, because you can't have an economy where you're doing transactions based off secrets buried in a hole. So that, I think, is a critical piece for, it's very nascent in the understanding, even within the crypto world. But I think that's a critical piece for actually realizing the gains and economic efficiencies that are purportedly offered by magic digital money with no intermediaries. So.
Right, yeah.
Okay, so I get to go last, and that means I get to give you the best answer because I can one up all the other guys. All right, so I absolutely agree that this idea of a secret with value is something very, very interesting. I haven't thought about it that way, and certainly the financial adoption is critical, and whatever Jack said. I'm sorry, but here's the thing. Blockchain is going to be adopted when everybody realizes that the emperor wears no clothes and all the systems that we rely on are broken. I can give you a very clear example of this. How many of you have an identity? You know, they talk about identity theft. How many of you have an identity? Is identity as a word, is that a noun? Yeah. And does anybody know what a noun is? Everybody got that little definition that you learned in high school or something? It's a person, place, or thing. Where's your identity? It's not a person. It's not a place. Well, if it's a thing, where is it? This is your identity. It's a credit card. It's a passport card. It's a global entry card. It's the card that lets me into the building. I have a business card. Another credit card. Southwest will give me drinks. And some more credit cards. I have a Costco card. In other words, your identity is a whole bunch of attributes that exist. But do they exist in these cards? Like, for instance, is my credit card always going to work because I have this piece of plastic? No. This card just is a gateway into a system of record where, in this case, American Express, if I will ever call this number that's stuck to it and activate the stupid card, American Express will honor my account because I have some room and I pay my bills, right? So this isn't the attribute. The attribute's in that system of record. In other words, all these systems of records have a little bit of data about you, and if somebody knows enough of that data, they are you. In other words, you don't have an identity. There's just a bunch of systems of records that are collecting some information about you, and if you can pass a trivia test, then you're you. Now, admittedly, you've studied up more on you than most people have, but occasionally somebody has studied up enough on you to take your identity. Now, did they take something? They didn't, because you don't have an identity. There's just a bunch of stuff about you that's running around in the system. This is broken. Okay? Now to go back to, I lost your name.
Carl.
Carl! To go back to Carl's point. Carl's point is you have an identity in Bitcoin because you have the secret. Nobody else has the secret. And you don't have to share it with anyone. You can keep it. You can even use it and keep it because you use the secret to create something that you then give to people that is proof that you have the secret. In other words, with Bitcoin, you, for the first time, actually kind of have an identity, right? Because of the secret. Now, we did this in the past. We had signet rings. Hey, raise your hand if you know what a signet ring is. Ah, the information professor knows. So a signet ring was what a king gave you that said, I represent the king, and when you pressed it into wax, it was an official thing, or you showed it to somebody and they obeyed you, okay? That was an identity because it was a thing given to you, and as long as you possessed it, of course, you had the whole rubber hose problem. Somebody beats you with a rubber hose long enough, you give them the signet ring and they take it away from you. But you had an identity. So what Bitcoin and the blockchain is doing is creating a system by which a system of record over here at a credit card can create an attestation signed and proven in the blockchain and hand it to the government who now has something that they know at that point in time that attestation was. They never have to go back and ask the system of record again because there is a provable attestation that at a time something was given. So on this little, and I'll stop here because this lecture actually lasts for 2 or 3 days. I'm going to stop here. Once the world recognizes all the systems are broken, once they realize you can't actually create an attestation from one system of record that you can reliably use in another system of record without having to go back again and constantly ask, like a 2-year-old in the back seat, are we there yet? That they can actually reason against attestations within their own system, where you can take that attestation and hand it to an unrelated party and they can validate it without the benefit of the systems of record. So you can no longer lie, you can no longer change the past, you can no longer steal someone's identity because you actually have an identity. Then blockchain will take over the world. And by the way, this is the one technology that, you know, I'm old, okay? Old. I'll give you that, all right? I have been watching technology for a long time, and I've gotten more and more and more pessimistic because I've never seen a technological advance that was going to stop the continued centralization and the continued collection of wealth and power in the hands of a smaller and smaller set of people until the blockchain. This is what gives us hope for the future. And when the hope is realized, blockchain will be adopted.
So you pull these cards out. I just have to point something out. So can I see one of your cards?
You want the one with money?
Sure. So these have chips now.
Yeah.
Right? So I said that the more you understand blockchain, the more analogous it is to money. Right? So money isn't paper. Money is a record in a database. Now, interesting for him to access that record in the database, now he has to use this chip on this card. And there's a private key that exists in this card that he uses to make a signature of a message asking to process a transaction, which actually gets approved in blocked increments. It's like 10 seconds on the Visa network. That goes to their database, and he gets an approval that comes back to the merchant, and it changes the value of the account in the database. So if that doesn't sound like a blockchain to anybody, I don't know what does. The difference between American Express's blockchain and a public blockchain, I think the two things that make these things very, very significant is, in his case, it's American Express's blockchain, or it's Chase's blockchain, or it's Bank of America's blockchain, and that blockchain is really just a siloed database, and you're dependent upon those people for your money. You think you have money at Chase. If Chase says you don't have money,
you don't have money.
You don't have money. So their ability to say solvent, their willingness to honor your identity as you present it, and their willingness to, give you fungibility out of that account, you're 100% dependent upon Chase. The cool part about blockchains is there is no dependency. It's a record, but it's a record that everybody can potentially access, and nobody has control of. But the systems that blockchain is going to use look exactly like the systems that we already use, but the people who control the database is different, and the people who control monetary policy is different. And those are like the two magic qualities of these things, but the more blockchain develops, the more and more it looks to be analogous to what we already use.
Analogous, but imperfectly implemented. Keep in mind, the chip we use in the U.S. is the broken version that they use in Europe. The one in Europe actually works. Okay, so I'm looking over at my information professor who either nods that I'm right or wrong. And the other thing, is that today all the systems of record hold the private keys. You don't have the private keys.
Yeah.
And that's so it acts like it, except blockchain is empowering, whereas the current system is.
I mean, the current system is completely dependent upon intermediaries and you trusting these institutions. Whereas blockchain is none of those things. It's you actually have possession of your assets and you don't actually have to trust anybody.
Yeah, I mean, you mentioned like digital secret sharing in general, and these different commitment schemes are very powerful primitives. And now we have this kind of alternative money, and we have that trade-off between security of the banks, and then, the convenience of the banks versus the security of your cryptographic blockchains. But yeah, usability comes into play and kind of alleviating those switching costs between the two. So yeah, I agree. Next I want to ask is kind of, what industries do you see as in the most imminent need for blockchain? What's begging for it? The solutions that it can provide? Where will we see the biggest impact and disruption?
Do you want to start with that?
Yeah, let's go for it.
Sure. I mean, I think that obviously payments, digital identity, self-sovereign identity, reputation, IoT security and data management. I mean, all of those are kind of like major disruptions and opportunities. You know, from my perspective, our focus is on energy, specifically, carbon markets and credit markets, and our main focus is like fixing major problems that the world's going to face, regardless of whether or not we can process 10,000 transactions a second or 100,000 transactions a second. My main focus was trying to make as much money as possible for 15 years, and then I woke up one day and I recognized that I need to try to do as much as possible to try to save whatever's left of humanity in the world and in the climate context. And so from our perspective, we need to be able to leverage blockchain in order to standardize our approaches to how we deal with ecological crisis, climate change, deforestation, fishery management. And so that's why our foundation is called the Token Commons Foundation. It's about common pool resources and common governance. And I think Eleanor Ostrom, who passed away, you can read her work and watch her videos, but she if you understand blockchain and understand how to manage complex systems, she was right on top of this, and this was 20, 30 years ago. So that's my major focus, and that's where I think things are going to be have the biggest need. So if you look at SDGs, I think SDGs and blockchain are the big deal, the Sustainable Development Goals.
Yeah, so I want to know any countries that you've noticed that have been really especially progressive and kind of creating a conducive environment for blockchain innovation. Any countries that have specifically stood out to you, and kind of maybe an example of how they're encouraging the space.
Well, Japan has done a lot of good things. Switzerland's done a lot of good things. Malta's done a lot of good things. Singapore and Hong Kong have done a great deal. I'll make a prediction that the most powerful countries like the U.S. will be drug kicking and screaming into the blockchain, because the current system puts a lot of power in their institutions. Global companies may be a little slower to adopt, and so the countries where those places are those global international companies are based may have a harder time to adopt. But China's making great strides in using blockchain, while at the same time occasionally having seizures of, oh, but this is real change and distributes power, and then they do a back. Let me give you a pattern. Every even year, China is really good towards the blockchain. Every odd year, they outlaw it. Okay. So my prediction is we're in 2018. On balance, it should be good. The Supreme Court has said blockchain can be evidence in court, They use this little project called Factom. Go figure. Even the former CEO of the bank, or president of the Bank of China, opened up the Global Blockchain Summit this year, talking about Factom and talking about how you can use this for data integrity and have cryptographic proofs. So China will be positive in 2018. Expect it, all cryptocurrency to be outlawed in 2019. Anyway.
So I wanted to kind of add into the previous question on where do we see blockchains being influential, and when you look at what blockchains do, they allow the removal of low value added intermediaries, right? So when we talk about payments, we can say, okay, that's Visa, MasterCard. When we talk about money, we can say that's Chase Bank, or maybe it's the Federal Reserve Bank, the Federal Reserve itself. But once you have the mechanism for economic cooperation, the concept, right, it's, smart contracts originally, dApps or DAOs or however you wanted to call them, have been borne out. And I think that once we kind of manage to nail down sort of this frictionless use of this economic layer, the next obvious thing is building the applications such that you don't need organizations to organize humans beyond just economic transactions, right? So that looks like companies, that potentially looks like governments. It certainly looks like, so companies, examples would be, so Grid Plus is trying to disintermediate the people that are in the energy markets and give everybody essentially direct access. You could do something similar to cell phone service or internet service. If you look at something like Google shouldn't exist as a centralized service controlled by a singular entity. The money that Google makes shows you the economic inefficiency that exists within that system that's willing to be removed if a new system is put in place. The same can be said of the banks and the percentage of GDP that the banks make up. Like, all of that can be removed as economic inefficiency. So, I mean, in terms of what blockchain is going to influence in the long run, like, we're just at this point where we're starting to make applications that look like email. If we're to make a comparison of the internet, like, we're just barely getting there. Like, these discrete, like, one-off messages to each other, right? We sent each other, a packet of information. Now we're sending each other packets of money, and those systems kind of still suck as they exist, right? But once we've gotten past that, once we get scale, once we get speed, once we get usability, everything's fair game in, like, all constructs of human society.
I want to pile on. Oh, you want to pile on?
Yeah, I want to add a little bit. I spent half my time in the past 2 years in Asia, right? And been to many countries. As you mentioned, smaller countries, they are more supportive to the blockchain technology. Like Thailand, you will be surprised to find so many Americans live there. I guess they made a lot of money out of Bitcoin and they moved there. In Southeast Asia, like Singapore, right? In the past, just the first half a year, for one company for registration, Wanchain actually registered our foundation in Singapore, so that's why I go there quite often. But for one registration company, they helped to register several thousand foundations, right? For in Singapore. So I think people view Singapore as pretty open, right? At least for now. One of the you can have more credibility, have set up company over there. Of course, Thailand is also opening up. They want to give licenses to some blockchain companies, and also South Korea is a very special case, and they really big percentage, the highest percentage compared to other countries, actually get into the crypto space. They trade coins, right? And the government's kind of on and off, try to figure out how to, bring the blockchain technology in the right way. And in Japan as well. I went to Japan many times, but trying to figure it out. But these big countries probably less supportive. But come back to the earlier question. I actually spent at least more than a year of time, right, in China, trying to figure out what will be the application in the enterprise world for the blockchain. Because China kind of clamped down on the coins and that kind of thing. So the blockchain technology is very supported by the government. Right? And we're trying to figure out for the enterprise world, for the banking industry or any industry, we feel that banking is probably the most lucrative one for blockchain. And that's the thing that we want to target, right? But first we want to start with enterprise environment. So we create something called Wanchain, right? A local area network, so to target the enterprise customers. But we go here and there, we just hit the wall here and there, right? Everywhere we go, right? Feel that we couldn't figure out the right business model for the traditional way of implementing the blockchain technology. And that's how I think it's the same thing is happening in the U.S. U.S. and China, I think, is the biggest economy, certainly, right? But all the enterprise focusing blockchain companies are hitting a wall, right? I remember that a majority of the POC used by the big companies probably will just end dead in the water, right? We really haven't figured out, but at the end, I felt that really we need to look at the tokens. Tokenless blockchain probably doesn't have the life, by itself. We need to really introduce the tokens into the, we call it token economy, right? Without tokens, it's very difficult. So then we figured out, well, once we have all these together, and we can target in the blockchain, in the financial space. So we figured out how to do it, and then at the end we came with the Wanchain idea, and probably I can explain a little bit more later.
And I'm going to dive in because I'm going to say that Jack and I are yin and yang here. I looked at all the applications that are exactly not tokens, and it focused on the idea that I need a signed attestation from one system of record that's usable in another system of record. So we're focused on data integrity, the ability to create an actual identity and leverage it between systems. And so that doesn't give me an industry that's going to be disrupted, more of a technology. We should have databases that can actually prove the sources of their data instead of what we have today, which are databases, and I can prove I have data in my database. By the way, proving that you have data in your database is just the definition of emperor has no clothes, because anybody can put data in a database. Okay? So, anyway.
Awesome, yeah. So next I kind of want to go down the line, talk about some personal projects and kind of your individual contributions to the space. So we'll start here with Evan. So you have your first big release coming up. What are some features that we can expect, and any details that are going to go into it?
Yeah, so our tech team is, we moved from a company looking to evangelize an opportunity to change how things are done in climate science, and into a project company. We're launching basically our first version of our tech platform that's really focused on the German power markets, which is a highly regulated, very intense power market that also has a lot of renewable energy, and they've done it in ways that I could say are not great, but they've done a lot more in terms of incentivization, incentivizing renewable energy and creating the right types of markets conditions to make that happen. And so the average user is not going to be able to do much. This is very much an enterprise play for energy companies that have distributed energy resources that want to participate in kind of a global market for climate mitigation and be rewarded for doing their part. And then basically it's the pursuit of a global carbon ledger. That's kind of where the first version gets us to. After that, the kind of the projects that we're working on are much more in the academic space. with the National Science Foundation and a handful of universities in the Northeast, working towards creating kind of this collaborative scientific method around climate assessment methodologies, and that's kind of where our next version, probably March or April of next year, is going to be a bit more exciting than just enterprise energy information intelligence. So,
exciting stuff. Jack, I want to ask you, why is interoperability such a main pillar, a main focus of your project, Wanchain?
Yeah, I think the idea started from when I was with Factom at the time. Right? We're trying to, so in the world there's so much data, right? And Paul and I will discuss this for a long time. How I keep asking, well, there's so many data and so much systems, so many systems, so much data around the world. How do we get them connected? And eventually they have to flow to each other, right? And when I was doing the enterprise solution provider, when I just mentioned a moment ago, we built these enterprise solutions, basically private chain, as I mentioned, the local area network, right? One over here, the other over there, right? Eventually, so we need to get them linked together, right? Just like in the old days, all these computer networks not connected. So I was doing some consulting work at that time. Just a few computers here, that's it, not connected to outside world, right? And when we look at the public chain, it seems like it's the same way, right? It's like one tribe of Bitcoin, another tribe of Ethereum. They use different languages, and they don't talk to each other, right? You have to go to right now we call it centralized market. These marketplaces and trade your, potato with tomato, right? And there are a lot of problems with centralized exchanges, right? And just a couple of years ago, I couldn't get my coins withdrawn. I was there, scared to death, right? And of course, there, centralized exchanges will have other issues, right? They will manipulate the price behind the scene, and you have no control, right? So we figured, well, we need to link all these local area networks, and we call it Wanchain. There's a reason. So why area network? At least we need to get them connected first before we come with, let's say, TCP/IP, HTTP, one level up, right? So sooner or later we need to come up with that kind of standards. Everybody talk in the same language, but at least the first step is to get them connected, right? So the purpose of getting connected is so information can flow over. More importantly, the assets, right? When I talk about token economy in the future, the traditional financial world, all these assets will be tokenized. Either your share, your stocks, or your house, or maybe a mine, right? All these things can be tokenized. And they will be moved on to enterprise solutions or public solutions. Eventually, all these tokens have to flow around, and they have to be traded. Or you can build, derivative markets like futures, options, all kinds of things, right? And then you can hedge it, right? All these things, eventually they have to flow freely by itself, and not controlled by the centralized exchanges. So that's why we came up with, well, let's come up with a decentralized way to allow all these tokens can be, traded at least, or flow from one network, local area network, to another, right? So that's why we think that this is the most important thing for now, at least to solve the issue the industry is facing, right? Another one is this, we call it trilemma issue for the industry. You cannot have scalability, security, and decentralization at the same time, right? And we try to come up with a solution to this, at least for this stage. Well, let's say Ethereum or Bitcoin, they have issues. For all these, decentralization cannot scale, right? What we do, we create something called Wanchain, right? Private network that can be tied or interconnected with Wanchain, right? So for all these high frequency trading or whatever the social network, that kind of application, you can move into either a side chain or a separate chain. And as long as they were connected, they should be fine. So that's our solution to the trilemma problem. So.
Yeah, and for a space predicated on open sourceness and decentralization, there's a lot of tribalism that goes around. So interoperability will help in kind of alleviating the antagonistic kind of approach that some of these projects have. So Paul, you mentioned Factom is working on a stablecoin that will be integrated into the ecosystem. You want to kind of give us a mental model of how that's going to look, and maybe your filtered thoughts on Tether?
Oh, my filtered thoughts on Tether. Okay. How many people have heard of Tether? Oh, wow, crypto-wise group. All right, so we're looking at the basically stablecoin is a term for peg tokens. Peg tokens aren't necessarily stable; they're just attached to something in the real world, and they're stable relative to that thing. For example, the most common stablecoin is a USD stablecoin, and yet you get several percentages of value loss every year by design in the system. So it's not really stable, it's just what we use to price things. And so people need to budget in USD, they need to pay their taxes in USD. So if they have a USD peg token, that's great. Factom is creating, or is going to be presenting an algorithm for creating a network of stable tokens, and the network works together so that all the tokens stabilize each other, and it does so without some of the disadvantages of reserves because there's no reserves involved, and without the regulatory problems that market manipulation suggests, which is the basis of most algorithmic coding. So there's no algorithm involved. Anyway, we'll be talking about it at the conference. The big problem that we see with most of these approaches is having actual records of what all of the oracles. Everybody know what an oracle is in this context? An oracle is somebody or something that gives some real world information and places it in the blockchain. Your blockchain doesn't know anything about the real world. So if I need to have the dollar value of a factoid, the token that we trade, or a Wanchain coin, I need an oracle to put that data into our system. Being a data-oriented system, we can create digital identities for who is the oracle, create a historical record, how well have they done, and basically give information. With that information, people can trust the system. So this is what we're going to be talking about in more depth at the conference.
Okay, looking forward to it. And Carl, kind of want to get a general outline of your project and how are you using blockchain to kind of mediate energy exchange without an intermediary?
Yeah, so that's a that's a hard one for a short period of time. The basic electricity markets have kind of these regulated players. You have generators, you have transmission, you have distribution, and you kind of have this financial piece, retail electricity provider. So for the average person who's using electricity, they have to essentially go through one of these reps, as we call them. It might be Green Mountain Energy or like an MK2, but they are kind of their gateway into the market. So that entity provides services. You could break those down into telemetry, hedging, capital and credit, and potentially control. Most services these days, right, it's really just telemetry and capital and credit. They don't, or telemetry, capital and credit, hedging, they don't actually give you controllability of your use or assets relative to market pricing. So what Grid Plus is doing is we're basically using blockchain to make real-time payments so we can eliminate capital and credit. Optionally, the customer can decide if they would like us to hedge for them or not. And then finally, we're providing control of assets. So they can read their consumption and potentially dispatch loads based off market prevalent conditions or prices. So the key piece that blockchain plays in there is essentially a mechanism for real-time payment. The eventual goal is not to just kind of give them access into the market, but to actually have the other counterparties in the market as well participate. So instead of just you start with the residential customer, you act as a rep. That's what Grid Plus is. And then Grid Plus would actually then potentially start using blockchain to pay, say, the generators for the energy they're producing. So you create a system where the whole thing is flowing through tokens, and at some point you actually don't need Grid Plus anymore. It's effectively the consumer paying the generator. You can think about that in a scaled system where the generator is a large power plant, but you could then also think about that in a distributed energy resource situation where the generator is your neighbor who has a bank of solar panels or battery. So.
Awesome. Thanks for breaking that down. I kind of want to just open it up to questions now, a bit of Q&A. Very short on time.
So if you do need to leave, feel free. But outside of that, we could ask questions. So, as a young person in college, there's like blockchain leads out there that's very early in the space. How would you suggest young people in college like us to get involved and work for these sometimes nonprofits?
Yeah, I mean, the interesting thing is the community is pretty open, right? Like there's meetups. So if you have interest in technology and you're willing to develop your technical skill sets to serve those interests, if you go to a meetup and you start talking to people, you show competency around blockchain and around that technology, I think it's a pretty good time for somebody looking for a job in that space. And we have 16 employees, so I don't know how many Factom has, but there's definitely jobs out there if you're looking and you're willing to sort of put yourself in that position.
We have about 36 employees.
Around 70.
It's about 70 and
Maybe 20.
So
Yeah, I had a question. You were talking about identifying people.
yeah.
So, are you saying like you want to give everyone like a number?
Nah.
Is that what you're saying? Like you just tell them your
Actually, identity is about proving that a thing has authorized something else, and so you probably don't want to have an identity. You want to have potentially a system of identities. You can use the fact that secrets have value to create a privacy layer between you and a party you're interacting with, like even a financial institution. And just because you have cryptographic proof, probably through a representative party that's going to stand between you and the business, to give them cryptographic proof of your willingness to use, to buy services, to use your credit card or whatever, without revealing who you are. So
What?
it is a incredibly interesting idea that if systems can have cryptographic proof of what you're attesting to, you can cut down on how much you expose about yourself to everyone you do business with. Let me just really quickly, I'm sorry guys, GDPR. Who knows what GDPR is? 3 people. This is the right to forget. as what the media calls it in Europe. What it really is if a company like, let's say, Reddit, has your account, you have the right to tell Reddit, don't show my information anymore to anyone else. You have control of your information. How do they know it's you? In today's world, you give them a great big set of all the random attributes because you don't have an identity. Now, does Reddit need to know where you live and how old you are and whether you're male or female today?
No.
No. But if you have a right to be forgotten, now you have to have the way of identifying yourself to Reddit to say, this is me and you should forget my information. Because he might walk up and say he's you. In this world where you don't really have an identity, you just have a set of attributes, everybody that holds data for you is going to have enough information about you to recognize who you are. In other words, GDPR completely destroys your privacy.
So, like, what are you saying is the solution?
Well, if you had a digital identity, and there was a identity company that puts an attestation on your identity that they recognize that you are this thing,
so
at least for the purposes of Reddit, then you can sign an attestation to Reddit, and Reddit can know cryptographically that it's you, and they can go against this thing to talk to him, and this identifying company that does AML, KYC, actually knows who you are, can say, yes, this is the representation.
Is that kind of like trust. Is that kind of like Facebook, where you just log in as like in a Facebook account to like gain access to another account?
It is, except that Facebook controls that.
Yeah.
So anybody
so
Facebook,
you want to eliminate the Facebook, and
you control this.
So who would be like the middleman? I guess
you control.
You guys?
No. Yep, no. You have the key.
Yeah. So like my private key would be like the thing that I would send, or not my private key, but like.
Actually, it's more complicated than that, and that's another hour. But to Jack Lu's thing, we can build a usable interface that Grandma can use. The thing is that Grandma has to be able to say, I want to apply for the credit card, and that think of it as, we need a technology that puts a password on your social security number. It's not enough to know your social security number and your address and your zip code, but there is a cryptographic proof that goes along with it, or the company doesn't accept your application.
Okay.
It's that idea of sharing a secret without revealing the secret itself.
Yeah.
Right.
And
see, even the identity company cannot compromise your identity.
You're in possession of it.
You're in
of
possession
of the private key, and you can build any number of abstractions, and you can share basically no data, or you can share all data, and you can share everything in between, depending on how you want to do it and how the application is constructed.
What would you do to make it like seamless to Grandma? Like
it's an application that runs on your phone that manages your keys, even cycles your keys against your identity. Your identity is a thing; it's not
like a password manager, but it would have like
a password manager.
You face
you have biometric,
yeah.
biometric password. You have your root identity, self-sovereign identity.
But if you're a libertarian, then it's a 45-character password you change every day because you just don't trust, the man.
So the person that would have like the other part of the key to verify would be everybody? Is that what?
Well, it's a public-private key system.
Yeah,
which is all these things.
But
right?
like
so
related to like a blockchain where like everyone has the.
With a blockchain, you have the ability to designate which public-private keys you're using, change those public-private keys out over time, specify the backup mechanisms to regain your identity should you lose your keys, and be able to do this in a way that when this guy, whose name happens to be Jacob Eugene, comes into the system, and he can audit the whole identity and prove that this now, no matter what's happened in the history, this is the key that should represent this identity. This is a system that's possible that can be in your control and can utterly secure what is your identity today. We have the technology today. And the application on the phone can be very usable, user-friendly.
I would say we have the cryptography today.
Well, we have Factom. You just don't know it. There's a little scalability issue, but that's okay.
Okay.
This question is a little more technical. Speaking of scalability, what upgrades at the infrastructure level do you see making blockchains more scalable?
For me, I think what you have to do is fracture the network and be able to sort what transactions need to be processed by what network. And then you have to have a cryptographic way of combining all of that to know that the result is correct. And with data, that's easy because a data matching a hash is proof that the data is the thing that matches the hash. But even transactions can be defined in such a way that you minimize cross-network communications to process transactions. So there isn't anything about Bitcoin, there isn't anything about Ethereum that can't be Ethereum, okay, I'll throw that out.
Yeah.
Ethereum has problems. But in just core blockchain transactions, there isn't anything that you can't create scalable solutions by sharding the network. Data is the easiest, but
Consensus.
well, with data, all you have to do is collect the hashes and you put them in a core layer. That's the way Factom intends to shard.
Yeah.
So with tokens, you have to have trusted parties that are managing the components.
Do you though?
I mean, in the sense that somebody has to validate the blocks. So the whole point of Bitcoin, now we're getting really technical here, but the whole point of Bitcoin is if I create a bad block and I send it in the network, nobody transfers it to anyone else because you can validate all the transactions in the block. And if the block doesn't validate, you don't transmit it to the next guy. It just stops there. And so you can't put a bad trade. By the way, how many of you know that North Korea is now counterfeiting the new $100 bill that can't be counterfeited? How many of you know that they're counterfeiting? Were you all aware of this? Look it up. They started counterfeiting in 2017, very end of 2017. They were producing $100 bills that cannot be recognized as counterfeit. How many of you knew that North Korea was mining Bitcoin? Okay. How many of you realize they're mining Bitcoin according to the rules? Now there are treaties, agreements, international organizations, companies at every level pressuring North Korea not to counterfeit $100 bills, and yet they do. There are some neckbeards working out of their mother's basements that say you shouldn't mine Bitcoin badly, and they don't.
Well, it's not because of the neckbeards. It's because of the economic incentives of the contract that is Bitcoin. Right?
You're killing my vibe. My conclusion is math is greater than armies.
Well,
you're continually told that Bitcoin can't work because there's no armies to enforce it. And what I'm trying to say is it's mathematics and incentives that do not require armies. And if I look at financial fraud, there is no amount of force that can make financial fraud leave at a fundamental level the current financial system.
but okay, so.
Well, he is really killing my vibe.
No, I want to unpack this a little bit. So,
yeah.
So when we think about money, right? The only thing that actually gives the U.S. dollar value is the fact that you guys are willing to accept it for something. That's it. Like there's no gold backing it. There's no full faith of the federal government. There's nothing there. We all suffer from this mutual delusion that it has value and therefore it has value, right?
We price in it.
Yeah, but I mean that's like a temporary state of mind that like that's something to price in. If I wanted to, I could price something in potatoes. I could price it in an ounce of gold. I could price in whatever I want. It's just the dollar as it exists today is a convenient unit which has properties that makes it easy to transact, even though it inevitably devalues over time, right? So when you look at Bitcoin and you look at like what actually gives Bitcoin value, it's because you have a Byzantine fault-tolerant system that Satoshi ingeniously designed, where he pitted essentially the miners against the holders. So because the miners and the holders are like in this inevitable, they have a different set of incentives, right? So to change anything in Bitcoin that actually changes the economics of Bitcoin is effectively impossible, because you can't get the stakeholders to agree to it, because it changes the underlying contract that is Bitcoin. Bitcoin is just an agreement that says, here are a set of rules to make a money system that we all agree to. That's it. That's all it is. I mean, that's what the dollar is supposed to be. It's supposed to be something that's scarce, that holds its value over time, and that we can transact. Bitcoin is exactly the same thing, except we can actually know what the contract is. We can actually make sure that the rules are being followed, whereas we can't know what the contract is with the dollar, and we can't know that the rules are being followed. So if you think about like what the value of Bitcoin is, and this idea that North Korea, can't forge Bitcoin, it's because it's solving the Byzantine problem. The Byzantine problem is, how do I cooperate with my enemies? The best form of money is the money that your enemies are willing to accept, right? So the fact that North Korea wants Bitcoin, the fact that North Korea can't defy the rules of Bitcoin, or at least they are economically incentivized to cooperate with them, the fact that Iran wants to use Bitcoin instead of SWIFT payments is telling you how vastly superior it is as a form of money than the dollar.
Love it. And while we're on Bitcoin scaling, are you more in the peer-to-peer electronic cash camp, like as in Bitcoin Cash, or more of the ultimate store of value proposition?
Okay. This is like after hours, so I'll get into it. I ultimately don't think that any blockchain today is economically sustainable in the long run. Period. The way that a blockchain works, the way that you get settlement on a blockchain, is because of an economic incentive. And that economic incentive is that I send money, and because of the work that was done to process that transaction into a block and then hash those blocks, my person that I'm sending money to, my adversary, so to speak, or in this case, I would be the adversary. So I would try to essentially roll back the chain, but for me to be able to send money and then roll back the chain, I'm going to have to expend a lot of money to do that. So the finality of settlement has to do with the cost of attacking the network to make the finality not final, right? So if we look at Bitcoin in the long run and we look at the cost of a transaction, there's this economic ratio that exists. And it has to do with the amount of money that's being spent to secure the chain versus the size of transactions that are crossing the chain. So right now, I would say in a truly Byzantine environment, you would be somewhat foolish to make a transaction of over $100 million on Bitcoin, because you actually wouldn't be able to know that you have finality of settlement within 72 hours.
That's 72 hours.
At 72 hours you would, but it's linear.
Yeah.
It doesn't go, it goes to like 100 million in the first day, but then every day after that, I'm only getting another $12 million worth of finality. So there's no way that I could go to Iran and say, hey, I'm going to pay you $1 billion for that oil, and if Iran is smart and it's a Byzantine environment, they wouldn't be willing to accept it because they wouldn't have a guarantee of finality. So for
they don't have one today. So,
Sure,
so the system's broken. This is the point.
Well,
But-
because of Swift, but in the dollar and all that fun stuff. But the point being is that the economic model that exists of the chains today and the scaling that they get on chain, and more importantly, the revenues that they can generate to apply to security, they have to increase by orders of magnitude if we want them to be useful for like the true economy. Because in the true economy, I can't settle billions of dollars on Bitcoin, and if I look at what the amount that's going to go towards security is going to be as the price of Bitcoin goes up in market cap, it's still not going to be tenable because there's not enough transactions on chain paying for security. So to fundamentally make an economically sustainable system, it's not about layer 2 scaling. You have to get the revenues from layer 2 stuff into the security mechanisms that secure the chain if you want these things to be economically sustainable in the future. And the only reason that Bitcoin is sustainable now, quote unquote, is because of inflation. It's because of inflation, but inflation goes to zero. So Bitcoin, it has pegged its death, essentially, unless it can figure out how to scale on chain.
Yeah, and I'm gonna argue a little bit. Today, you can send $100 million safely on Bitcoin because, despite the fact that it can be attacked, it would be impossible to hide the attack. And in a lot of most situations where you're accepting $100 million, you would be unwise to identify yourself as attacking that payment in a cryptographically provable fashion.
You're talking about the social constructs of nation states enforced like in the legal systems
to
that surround them, right?
But to compare,
augmenting that of the money system.
LIBOR and the credit default swap scandals manipulated $800 trillion worth of assets, and nobody could tell. And here we're talking about a paltry $100 million, and it would be cryptographically and economically obvious to all. And as you go up the scale, the more obvious it becomes. And so I'm just saying, this is in contrast. I'm just contrasting the security that we have in these systems.
But you're backstopping it with the systems of force and the legal systems that are in the constructs of nation states. You're not actually
the developers can intervene. Go ahead.
Yeah. So I can like see it being used like Bitcoin like for everybody, but the only issues I see is like how would you pay taxes? Because like we actually need those. Like how would you like force people to pay taxes?
Well, that's a curious question. The question is whether we really need taxes when more and more effectively we're paying all of the real bills in inflation today because our government is just borrowing the money.
But if the government doesn't own the monetary system?
Yeah, if the government doesn't own the monetary system, we can't afford
Yeah, like
armies.
what would happen if everyone
You can't afford armies.
Exactly, so like it can't.
And so
yeah, so then we're just gonna get bombed.
By the way, look at history. Every time we've punted on the gold standard, it was because we had a major war that we couldn't afford. And we left the gold standard in 1971 because of Vietnam.
Can you talk a bit about the fluctuation in price of Bitcoin and what are some of the triggers that make it go up or down to even like lose 30% or 20% of its value in a single day?
Crypto is a surprisingly volatile asset. I predicted that once it went over 100 billion, you'd see great stability, and I was just wrong. So you're the economist.
I mean, Mark, I would say a fair portion of it is sentiment, weak hands, market manipulation. I mean, I would say that's most of it. The fact that the value changes by $30 billion in a week, that's, again, the market is looking for price, to try to find a floor for the price, but again, it's hard to value. You have money flows coming in and out, and you have speculators willing to push it down. I think if you look at the run-up through December, January of last year, you had a run-up on speculation, on hype that the NYMEX futures contracts were going to move institutional money into the ecosystem and space. You have, the markets are trading at, like, let's say, in some cases like $7 or $8 billion a day on a $120 billion asset class, which is small, right? So you have, basically a large, a small percentage of the float basically moves the price up or down, and then there was the ability to short the market. So about a year ago, you really couldn't short or borrow to sell and speculate on the price going down. So again, market makers make a lot of money, and so does Cumberland Mining and a bunch of hedge funds, to basically move the price up or down from there. And so sentiment definitely drives it. Bad news drives it. You have people who hate it, who are driving it down. You have people who love it, who are driving it up. The Mt. Gox liquidation probably didn't help. Basically, trustee was given the ability to liquidate funds that were held in escrow for the Mt. Gox implosion. And they're looking for price and people to buy. And you need to have new money coming in order for the thing to keep going up and to the right. So that's my thought there.
Exactly what he said.
Of all the things though, in like blockchain and crypto space, although price is kind of fun to play with, just because we all like making money, right? I think it will be the least remembered thing 10 years from now. So
we have about 5 minutes until 8:30, so I think we can wrap up then. Is there any other outstanding questions or anything that y'all would like to ask? So credit's like a huge part of our economy. How do you think in the future loans would be available in a crypto environment, and how would you qualify?
This would be where a stable or peg token saves the day, because you can peg it to whatever you believe is a fair standard for defining loans. Keep in mind that loans inside of a crypto world, where you don't rely on the vast infrastructure of the financial and banking institution, where consumer protection is largely business model protection, not actual consumer protection. You're paying lots and lots of hidden costs, and so in a world where things are more asset based, you may need a different sort of peg than
but it's also asset based and auditable, right?
And
so the fact that like your bank can run, at a reserve ratio of 10 to 1.
Yeah.
And they're really running it at like 30 to 1. And they pay you like 0.5% on your savings account, but then they originate loans at 6%.
But you aren't the source of funds for them. So just to be fair.
No, but every depositor bolsters the reserve ratio. So like you put $1,000 in, that allows them to hypothecate a loan for $10,000.
But that's assuming that you even put any money in, because you don't. That your money wasn't real. Bank-to-bank money is not real assets.
At some point,
Yeah.
it is real, quote unquote, because it goes back to the database in the Fed book,
Yeah.
right? Which is anyway. So at some level, when you put money into a bank, they can up their loans, and you basically get nothing for it. In the crypto world, if somebody's having your asset that you're not the custodian of, and they're loaning it out, one, you're going to be able to see that, and then two, you're going to demand proper compensation for the amount of risk that's actually being taken against that asset, rather than socializing that risk through a function like FDIC insurance, where the government has an implicit backstop to deposit accounts up to $250,000. So in the crypto world, it should be like more free, more fair for the people that have assets and are making those loans. You're actually going to get paid for the risk that's going against your money.